Visa debuting on Wall Street today with the largest initial public offering in U.S. history, pricing at $44 a share and trading under the symbol V. Very nice on the New York Stock Exchange. Visa right now is currently trading up $15 or 35% to $59.63. What does this $17.9 billion IPO mean for the markets, the economy, and also investors? Let's ask David DiPietro of Signal Hill, president. We also have Brian Hamilton, founder and CEO of SageWorks. And we have today's guest contributor, Michael Farr, as well. Gentlemen, let me start with you. Michael, you know, it's amazing to come out and do an IPO in the middle of this market, and a successful one at that, wouldn't you say?
I think it's great. I mean, I really think this is terrific that a volume of a company this size and this sort of market cap could be absorbed, that the appetite was there for it, and that it went up. Shows that there are buyers still out there who are paying attention to balance sheets. This is my kind of company. It's too expensive for me to buy right now, but I look for an opportunity at some point. But I think it's a good sign for the market, no question.
David, what do you think?
Well, I think this is one in a series of very positive developments this week that hopefully will mark, when we look back, will mark a bottom. I also think it's great that it had such broad impact across such a large cross-section of the financial community, the investment banks, the commercial banks who own the shares in Visa, as well as the institutional investors who have had a tough start to 2008. And then finally, I think it's good because it has people looking at this as a great company at a great price, at least the initial public offering price, and hopefully investors will carry that mode of thinking into the broader marketplace and look for other great companies that are trading at similarly attractive levels right now.
Brian, I mean, first and foremost, this is a commentary on the consumer and how much they're going to go out and spend. I mean, this strikes me as the very thing that we've been talking so much about, the point of weakness in the market. You know, do you think that today's positive note is kind of a temporary bounce based on yesterday's move?
I think so, but, you know, as these guys have mentioned, there's far and few companies that actually have good earnings, good growth. There's not a lot of economic risk, good business model. So those types of companies are always going to do well, I think.
Brian, how do you think it stacks up against the other credit card companies in the group?
Like a MasterCard, for example?
Exactly.
I'd say it'll be similar, no doubt. There are some red flags, or there's some blips. There's no doubt about that as well. I do want to mention that. Go ahead.
Well, what are some of the red flags and blips?
Well, there's the little whopper, the $2.7 billion charge-off in 2007 is something to be aware of. It's a litigation-related expense. I don't think it'll be recurring, but they've got a bit of a mess with class action lawsuits. It's something, if you're investing in the company, I would definitely look at that. There's been some management changes. The IPO market itself has been a little bit volatile. So you've got a good company with strong fundamentals, but there's a couple of blips that people should be aware of.
And Brian, you know, it's about 8 or 9% premium to MasterCard right now, so that gives me a moment's pause. I think probably maybe one of the things that we might look forward to as the economy might be a little tougher on the consumer is we'll see more charges on plastic.
Yeah, that's true.
Yeah, I think so. And guys, keep in mind that basically you've got credit card stuff, you've got ATM transactions. These guys are really not in the credit business. They're in the computer network business as a service company. One thing I do want to point out, though, I think the offering is still a little pricey. That's one thing I would slightly disagree about. If you look at the different earnings numbers and you add back the provision for litigation and you look at the earnings over the last 3 years, I think it's a little bit pricey. But, you know, I said that about MasterCard about 18 months ago, and they're up 400%. So, you know, who knows?
David, would you buy this stock right here?
I'm sorry?
David, would you buy the stock right here?
Well, it's trading at a premium to MasterCard, but I think that companies that have unique franchises and this kind of steady growth rate in what is a tough economy warrant a higher valuation. So I think it's still at a reasonable level, and I think we see a number of other companies, particularly in the small cap technology sector, that ought to be looked at now as well that have been beaten up a little too much. So I think it's still a very reasonable valuation.
But what's unique about this compared to MasterCard?
Well, it's just larger and apparently has better margins, and I think their franchise is 1.5 to 2 times the size. So I think it just gives it more stability in the long run.
All right, gentlemen, thanks so much for joining us.